Alibaba stock to jump as Chinese government pledges more stimulus. Policymakers are pledged due to help the country meet its 5.5% GDP growth target in a meeting on Friday. That was expected. And finally, the most important news, the government set to mull easing regulations. The authorities are moving to pause a regulatory campaign against the technology sector as economy slows. Maybe it's finally the time for bull market in Chinese stocks. But as always, geopolitics, regulators, corona and other black swans can ruin everything. Now the crash of American stock market creates extra pressure and dragging all other markets down. Alibaba's artificial intelligence tool to improve efficiency of China's waste-to-energy plants. The AI algorithm developed by Alibaba is currently used in 100 waste-burning facilities, and it will be installed in another 300 plants by the end of the year. Well, if anyone interested in the Chinese waste-to-energy sector, there is China Everbright Environment, Hong Kong market. That's a reliable dividend stock. And by the way, I want to remind that if you want to buy any Chinese stocks and worry about the listing risks, it's better to buy them in Hong Kong, so you don't have to worry about that. Alibaba Group Holding led a 60 million investment in Chinese augmented reality glasses maker Unreal to stake a claim in the future of the metaverse. Well, if there is a smallest opportunity to make money, multiple competitors immediately appear there. If this startup successfully develops, Alibaba will report profit from investing activities. Alibaba Cloud and VMware announced the next evolution of Alibaba Cloud VMware service, a jointly developed public cloud. With the service, enterprises across China can accelerate enterprise cloud transformation to support digital innovation with lower costs and risks. More and more Chinese enterprises are adopting a hybrid cloud model to accelerate their digital transformation, as General Manager said. So Alibaba stock is now close to its IPO price, despite that the company's revenue increased 14 times since 2013. And nothing critically bad happened to Alibaba. The forecasts are still positive. Yes, the company will no longer grow as fast as it was before. Alibaba's revenue grew as much as 40% in 2020. Now it's expected to grow 13% per year. But that was expectable. Any fast-growing company will slow down sooner or later, even though the reasons for the deceleration here are not only high base effect. Yes, there are risks, and let's be honest, all Chinese stocks always had higher risks than American. So now the company is cheaper than ever. Forward price earnings ratio and price to free cash flow have never been lower since IPO. The company does not have large debts and everything is fine with finances. But it doesn't mean that the company is undervalued now. As I said, all Chinese stocks have higher risks and the company is growing slower now, so this is just fair price. In my opinion, the company is not for low risk investors, and the most important is that if you want to invest, it's better to buy in Hong Kong, not America, so you will not be worried about the listing risks.